Hey there guys, and welcome back to Alex Invests. For those of you who don't know, I'm Alex. I'm a business owner with a degree in economics, and today is Sunday. So of course the markets are closed and we went with a bit of a blue today. But anyways, I hope you guys did have an amazing Christmas these past few days. That is of course why I haven't been posting, spending some time with the family and all of that, of course. Something else you guys may have noticed is I'm wearing a new t-shirt. Eat, sleep, trade, exactly what I love to do at Alex Invests here, right? So amazing. This is a gift from my girlfriend that I got for Christmas. Very, very nice stuff, but I am glad to be back here to give you guys more stock tips again. So today I wanted to talk to you guys about the hydrogen industry because it has just been exploding lately, especially FCEL. And FCEL is the one that was my favorite since the beginning. And I told you guys, if you do pick one, it should be FCEL for now. But of course, all the other ones are great too. And I am invested in Plug, Ballard, Bloom, and FCEL, so all four of them. So I've had a great run with those lately. So there are a few catalysts in general here why the hydrogen industry has been rising so much. You know, Plug, for example, was at $24 the last time I talked about it, and now we're up at $35. That is a 44% increase in just the past few weeks. Fuel Cell, again, up 55% in just the last few weeks here. And I remember the last time I talked about them as well, we were at the $8 mark, and now we're all the way up at the $12.50 to $13 mark. So absolutely huge gains there. Ballard too has been moving up a lot, right? And of course Bloom as well. So why have we seen this big rise in all these? Well, I think a big reason behind it is that stimulus check that came out, right? Because in that bill there's a tax credit for renewable energies for up to 2 years at 26%. Essentially, companies who are in that renewable energy space will have a 2-year extension. So that means for the next 2 years, companies like FCEL, like Ballard, and all the other renewable energies, including solar, including wind, and all of that, will be credited for that 26%. There is also in the bill with this renewable energy funding for R&D, right, which is very big, as well as money for upgrading the electric grid. So this clearly is slightly geared towards the hydrogen industry because of that wording they use. They say in the bill that $500 million will be for R&D for reducing industrial emissions. And with FCEL's SureSource capture platform, as well as some of the other things they're doing, like their power grids too, these things really show that the hydrogen industry is going to take advantage of some of these tax credits and stuff, and that is why we've seen this run. And if we look at FCEL here, the run really started as the stimulus came to fruition a little bit, and since then we've just seen the price rocket upwards. Now there is something important to note about the stimulus bill, and that is that there is a little bit of rocky road ahead because Trump, of course, still has not signed off on the deal. He wants more money for individuals, up to $2,000 instead of the $600 which has been negotiated. So that means the stimulus checks are not yet given to the people until Trump does in fact sign, or there are some renegotiations. And I'm surprised that that hasn't resulted in more downward pressure on these hydrogen stocks again, but that just shows also how much excitement there is for this hydrogen industry. And once Trump does finally sign that stimulus bill, we're going to see even more upward pressure on this stock, in my opinion. And it's not just the stimulus bill that is pushing for these renewable energy, clean energy companies like the hydrogen industry, right? But it's happening all across the world with legislation as well. I mean, the EU and China, for example, are very big on this technology. The European Commission wants 500 gigawatts of power to be able to be produced through hydrogen technology. And because of this, they are dedicating 1,300 gigawatts of power produced by wind and solar in order to produce this hydrogen for this industry, right? And there's reasons behind that. And one of the big ones is that seasonal storage, right? Because obviously wind and solar, they have seasonal patterns where they make a lot of energy. Solar, obviously in the summer where the sun is always out, and wind, of course, only when there is wind to power these turbines to produce electricity, right? So we need this power of 1300 gigawatts in order to get our 500 gigawatts of hydrogen power, because it obviously takes a lot of energy to produce hydrogen. But now with this hydrogen energy, we have it all year round, right? But of course, it's not only the European Union that's doing this. China as well is pushing very, very hard for this legislation. And of course, the US as well, with Biden now being elected as the president. There's going to be big moves by him made in the next 4 years. You know, we've already seen tax credits, and I think we're going to continue to see tax credits moving forward. We're going to see more investment in R&D as well as other aspects of not only the hydrogen industry, but also all of the renewables like wind and solar, which will then be eventually used to help to create that hydrogen. And that's why I think we're going to see much more gains moving forward here into 2021 as well, because of all this legislation that is being pushed. Now, some news for FCEL recently may have also contributed to the big run we've seen in this company, and that is that they are trying to get their Connecticut Awards reinstated, because they had 3 fuel cell projects that they were awarded in Connecticut, which state regulators actually ended up taking back and giving to a solar company. So the CEO of Fuel Cell Energy came out and said that this was unfounded and highly irregular, and because of this they are looking to get those reinstated and then move forward with those fuel cell projects. Now, this can be a good thing in one sense because they have more business, of course, if they do end up getting it reinstated. They also are standing up to these state regulators, which may not be in the right here, but you also have to keep in mind that these are customers of Fuel Cell Energy. So basically, Fuel Cell is taking a stand against its customer here and going against a potential customer. So that is not really that good of news. You don't like to see that clashing, especially when, you know, the customer is always right. It doesn't matter what industry you're in. So going after the state because they haven't fulfilled their, what isn't really even an obligation to build these fuel cell projects, really not that great. And it does speak to the amount of projects they may have. It might not be enough, and perhaps they're just looking to propel themselves further quicker. But it is something that I'm a little bit skeptical about, especially with some of the things the CEO did end up saying publicly. And this really gets us into that carbon capture, right? And I've talked about the carbon capture before. This is their SureSource capture platform, and you can check that out in my other video up here. But essentially, you can hook this SureSource capture platform up to traditional coal plants, etc., and make them not only more efficient, but also close to carbon neutral at this point. With more R&D and stuff, we will get fully carbon neutral with this technology, and it is much better than the leading technology in the field. And of course, for that carbon capture for fuel cell, they are working with ExxonMobil, so they have a huge company backing them. And if they take their SureSource capture platform and install it in all of those ExxonMobil plants, we will see big gains in this stock. And of course, we will move into profitability consistently very soon as well. Now, the carbon capture is the nearest term catalyst that we will likely be seeing for fuel cell, and then their SureSource recovery as well, of course, with their main thing being that fuel cell technology and those power grids that they're working on. But these other things, this differentiation we see, is very good as well, because you see a lot of the other hydrogen companies also obviously doing those fuel cell power grid stuff, right? And that's why I'm such a big believer in Plug too, because they're focused on that material handling industry, which none of the others are. So I do see a great year ahead and a great few years ahead for fuel cells specifically, but for the entire hydrogen industry as well. All right, so I just wanted to go through the chart with you guys quickly here now. So if we look back all the way back here on the 12th of November, right, to now, that is an increase of 380%. And I remember telling you guys to get into the stock right here for the first time at about the $5 mark. You know, I mean, I've been in this since a long time ago, since back down at around the $2 mark, but it was way back here, right? And I did hold steady throughout this period. And then of course we finally did come into the huge run, right? And right here again, I told you guys would be a good time to buy. This was right after their public share offering, right? And we saw consolidation, and then boom, all the news from the stimulus came out, right? And we saw all the clean energy stuff that was in there and what's happening in the world right now, and boom, big spike up, right? And now we can see these two trend lines I drew, right? If we look at the top one here, we can see we hit that top of the channel, right, and came back down off of that. We're going to continue to see that uptrend, yes, but you know, after this big run, we were at the bottom of this trend line, right? And we shoot up to the top of this trend line, and we're going to keep seeing that. I think we're going to see maybe it come back down a little bit, and then I would be willing to buy. If this stock hits the $10 price, I will be picking up a lot more shares. At the $12.30 mark, I am not picking up more shares at this time. The price looks high to me. You know, and we see time after time again, when we get to the top of that channel, we come down a bit. Now, we could consolidate around here, but we could also consolidate a little bit lower around that $10 mark. So if we do see that, I will be buying a lot more shares in this company. We can see as well volume continuing here. We slowed down on the volume a bit here, right? And that's why we saw this consolidation. And then volume picks up again. Big news on stimulus, right? Huge run up again. And of course, we got to look at this too, right? We see momentum is switching again here, and we already saw the price come down a bit. So I wouldn't be surprised if tomorrow we see the price come down even a little bit more from there, because we are at an extremely high price right now. That being said, I am holding all of my shares, and again, I will be buying more if the price does drop a little bit more. All right, guys, so that's going to do it for the video today. I hope you guys liked it. If you did, please like, subscribe, leave me a comment as always. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.